Okay, my name is Riley and I've been trading for 9 years at this point. And in this video, I'm gonna give you the 13 most important trading lessons I've learned over that time. It's not gonna be theory. It's not something that I just pulled off the internet. These are lessons from real trades I've taken, real mistakes, blowing up accounts over and over and having to rebuild from scratch. And finally figuring out what worked for me. And also from working with thousands of traders and seeing exactly where people get stuck and what actually makes them succeed finally. Now, I do want to say this before we get into this. Some of these lessons might challenge the way you've been thinking about trading. They might go against what you've been told or what you feel like you should be doing to become successful at trading. But I can promise you this, if you actually understand what I'm about to break down, you're going to start looking at trading a completely different way. Because over time, what I've realized is there are a lot of things in trading that feel productive, but don't actually move you forwards to becoming consistently profitable. And there are a number of things that completely changed everything for me, and that's what this video is about and how it can do that for you too. Now, these 13 lessons all really fall into 3 major groups because almost every trader that is struggling right now is stuck in one of these 3 areas. One is why traders never actually improve, why even with a good strategy, they're actually still losing money, and what actually makes someone start to become consistently profitable. And underneath all that, what you'll start to see is that most traders are just stuck in a couple of repeating cycles. So whether you're just beginning trading, or you're a trader who's been struggling to make money for years, or someone who is starting to make money, but you're stuck in what is classified as a boom and bust cycle. This is gonna completely change the way you approach trading. And if you actually implement this, it can completely change your trading career. Now, the first lesson here is simple, but probably the most impactful and where people lose the most money when they first start out is trading is a game of probabilities. And so because of that, some people, when they first start out, they can just get lucky and go on a win streak. And what this does is it makes you feel confident when really it's a false confidence that gives you the ability to think that you figured it out. You can now start to size up. If you've ever heard of the Dunning-Kruger effect, you're essentially on the top of what's called his Mount Stupid, where your confidence is really, really high, but your actual experience and ability is really low. And so what happens is you can go on win streaks. Like for me, I went on, when I first started certain strategies, is I would follow the strategy really well. I would go on a win streak, make a lot of money over a couple weeks because I was following the strategy really well. And then so I would get really confident. And then I would start to think, okay, well, I've mastered this. I can start to increase my size. I can start to add other types of trades to where I can try and make more money because I've figured the market out. And what ends up happening is you've just hit the far end of the probabilities of going on a win streak. And then of course, at some point, those probabilities have to come back to the norm and you start to lose money. And all of a sudden you start to go on a losing streak because you haven't built the experience and knowledge to be able to handle that and realize what you're doing is you're starting to add more trades that aren't actually successful and you're starting to destroy your account because of that initial lucky win streak. And I've had people email me about losing thousands or tens of thousands of dollars because they size up too quickly. You do not want to judge your trading ability off of a small sample size. You really need to be doing something like 20 to 40 trades and going through months of trading to even have a decent idea of your ability. So now that you have learned a strategy and started to lose with it consistently, you start to think, okay, well, I need to just learn more about the market and find something that will improve my win rate, try a new strategy maybe, because this one's not working out. And so this is what gets you stuck in the first major cycle that can keep traders and kept me trapped for years, to be honest. And how it works is you learn a new strategy because there's so many on the internet. Basically, there's infinite possibilities and ways to trade because there's so many different markets, there's so many different time frames. There's just infinite amount of information and possible price movements the market can have. You go learn a new strategy because you think, okay, well, logically, in any other space in the world, if you learn more, you're gonna get better at it. And with trading, that's not necessarily true. But so you learn a new strategy and you go and test it out, maybe has some success for a couple weeks, but ultimately it doesn't work out. And so then you start to say, okay, I'm not getting the results I want. And so I need to go back to the drawing board and learn a new strategy because this strategy just doesn't work for me, or the strategy just sucks. And that's a super logical, intelligent way to approach trading, of thinking that the more you learn, the better you'll become. But that's not how trading works. What ends up breaking you out of that cycle is realizing, and it took me years to realize this, but simpler is better. I went through so many ups and downs of losing streaks, blowing accounts, essentially hitting that wall of so much struggle that I wanted to give up. And so my last ditch effort at becoming successful was, okay, I'm going to think about, what am I actually good at with trading? What do I feel confident in? And my confidence was that I am good at drawing essentially support and resistance zones. I'm good at big picture, looking at where the market is potentially or likely to reverse off of. And so I thought, okay, how could I make a strategy just focusing on that? And I've realized over time, and teaching other people and getting feedback from other people, that is the real edge in trading. One strategy, one pattern that you can really master. Instead of trying to master 10 different strategies and having a ton of indicators or a ton of patterns and a ton of signals, you focus on mastering one thing. It's way easier mentally to try and just master one thing and repeat it over and over. When you have that one edge you're focusing on, it's way easier to execute on it, track it, improve on the strategy that you're doing, and consistently focus on repeating it. I highly recommend is trading one asset for this. Trade one type of setup and trade essentially just a short amount of time a day. I'll talk about my strategy a little bit later and how it kind of encompasses all those ideas, because what it does is it became super easy to consistently repeat. And this kind of goes into lesson 4 of don't try and master everything. Don't try and trade stocks, options, futures, crypto, and Forex all at once. Pick one asset. Literally focus on one market. If it's just one stock, like if you just want to trade Tesla all day long, do that. I only focus on trading the S&P 500 futures, which is just good for simplifying trading, but also starting with a small account and growing it. But essentially the idea is, because I watched this one asset day in and day out for years, I have started to master it and really understand how it moves and flows. And this just allows me to have such intuition now about what happens that it feels like sometimes that I have a crystal ball. I don't necessarily make money off of every move that I can see potential happening, because that doesn't fit my strategy. But very often I can be saying something like in my trading room of, oh, the market looks like it's likely to do this, like either break a support zone or trend in a certain way. And 20 minutes goes by and that read will be correct. And of course, I'm not right every day, and I don't necessarily, have a crystal ball. Of course, the market does things that I don't understand all the time, but mastering that one market has allowed me to have such a confidence in reading it and my ability to read it. And that's only because I have focused so strongly on one specific asset. And over the years, I've tried to expand, because I think, okay, well, you fall into that trap of, if I can trade more assets, well, that's more potential trades that show up. And so I've tried to expand to trading oil or the NASDAQ sometimes, or gold. I've always tried those and ended up really not making as much money and losing some money, because I just don't know those assets as well. And always just coming back and focusing on one asset has really been what's successful for me. Because when it comes to trading, how you really make money is scaling up and increasing your trading size to where, you're not making $50 per trade now, you're making $5,000 per trade. And so one of the biggest mindset shifts that happened to me over focusing on this stuff, and what really helped me break out of that initial losing cycle of the learning loop, was focusing on one specific strategy, but also not trying to catch every move. There's so much movement in the market that you'll see the market, especially on a volatile day, it'll go up, down, sideways, it'll have a big move in one direction. And you think when you are looking at the charts, oh my God, there's so much money to be made if I catched every move. How can I do that? And I've tried to do that. I've tried to shift my strategy sometimes to be more aggressive to try and capture all those moves. And what happens every time is I just end up actually losing more money instead of sitting and, maybe not taking a trade for a week or multiple days. But when I do take a trade, I'm way more likely to win. And at the end of the day, all we're looking for is a profit graph to consistently go up over time. And it's hard to not take a trade and try and make money every single day with trading. But over the long run, it's not about every single day. It's about just seeing whatever makes that graph slowly move up. And a lot of times, every person kind of needs to go through that cycle of trying to make more money consistently. But over the years of me trying over and over, I've always come back to taking trades less often, and just the best ones is what has actually made me consistent money over time, even if that requires me to wait multiple days or sometimes even weeks for a trade to show up. Now, all that's really helpful for breaking out of that first cycle and finally starting to focus on a strategy that will consistently make you money. But a lot of traders, and what generally kicks you back into that learning loop and that initial losing cycle, is they'll find a strategy that really feels like it works and it's really good, but they'll still end up losing because even once you start to stick to a strategy, learning to master and becoming consistently profitable with it is a whole nother losing cycle in itself. Because the whole reason why someone like me can be successful with a strategy, and if you try and execute it the exact same way, you will still lose money, is because of what I call the self-sabotage loop. If you've traded for a while now and gone through ups and downs, is you'll realize there's times where you make emotional decisions in trading, where you chase a trade that ends up losing because really you shouldn't have been in that trade to begin with and it didn't fit your strategy. Essentially, the big picture is your emotions derail your ability to execute your strategy properly. The whole idea is you have emotions that negatively impact your trading. And instead of entering in when your strategy says you should, your emotions essentially hijack your ability to execute it properly. And so they control your actions. And so the whole idea is not letting something like nervousness stop you from entering into a trade, or FOMO making you jump in on a trade that you really shouldn't because you think the signal is there when it's really not yet. And so all these emotions affect everyone in slightly different ways. And so you need to start to be aware of those and learn how they affect your trading. Because what you'll realize is you have essentially a cycle of how these emotions consistently over time repeat themselves. And so to kind of give you an example of what my self-sabotage loop looked like, I would try and enter in the trade, and every time I would want to enter into a trade, it would start off with, when a trade signal shows up, I would start to get fearful because I had the fear of being wrong. What if this trade, even though the signal shows up, what if this specific trade doesn't work out and I lose money and I'm wrong? And that was a big ingrained fear in my brain. And so what that would cause me to do and how it would affect my ability to trade is I would skip the trade out of fear, basically. And then so quite often, because my recognition of the strategy was good, I would miss a winning trade. And so I would get frustrated because, I just missed a winning trade when I saw it. And in reality, I knew I should have got in, but I got scared and I skipped it. And so what that would then cause is I would stay trading and I would look for more setups, because now, I'm pissed off. I've missed a good trade. I want to see if another trade sets up that I can take. And so I would then impulsively, out of FOMO now, jump into a bad trade. The signal wouldn't quite be there, but I thought, oh, this looks good enough. I'll just get in because I don't want to miss another trade that ends up winning, because then I'll be really, really frustrated. And in the end, what would happen is most likely the trade turns into a loss because, well, it wasn't a good signal. I jumped in impulsively too early, and then that would turn into more frustration. Honestly, most likely at that point, I'd be a little more than frustrated. I'd be pissed off. And I would either go into revenge trading and take more losses and, start to go into one of those kind of death spirals of a trading account profit graph, which doesn't look good. Or I would, force myself to take a break, either be done for the day or done for the day and not trade the next day, because I'm just so frustrated and I realize, okay, I'm really emotional. I need to take a break. And so as someone who is working to master a specific strategy, you need to start self-reflecting and realizing, okay, what does my cycle look like? How do I not let these emotions control my actions? Because that will really help you break out of that cycle, that self-sabotage loop, and become consistently profitable. And so some major lessons that kind of fall into breaking that is a good trade is not the same as a winning trade. This kind of goes back even to lesson 1, where you can go through a lucky streak of a bunch of wins just because at the end of the day, trading is probabilities, and a small percentage of people will get lucky over and over and over for a while. But just because they won doesn't mean that they're actually good trades and good entries. That's why winning on bad trades is more damaging, honestly, than taking a loss on a good trade or even a bad trade. Because when it comes down to it, you can take a perfect trade that over the long run is going to make you money and lose. And you can take a terrible trade and win. You can't judge your trades and how you executed and entered in on them based on their one singular outcome. Just this past week, I had multiple trades that went break even, but I think they were perfect entries. Or even I'll have sometimes losses where I think the entry was great and I did nothing wrong. But once you're in a trade, the market can do anything. No matter how perfect the entry looks, there can just be news that pops out all of a sudden. A tweet could happen that just makes the market just reverse in the other direction all of a sudden and knocks you out at a loss. That's why you can't get married to an individual trade. Every successful trader goes through losses. A lot of good traders have like a 50% win rate. I think mine is like 40%. The goal isn't necessarily to be right every time, which is really hard for a lot of people, myself included. But what your goal is instead is to be focused on executing your strategy successful every time. That's what I see as a win. Those trades that lost for me or become break even, those are still successful trades because I entered in when my strategy said, and I managed it how my strategy said. I followed my plan to the T every time, because I know that that is what's successful over time. But I could just be on a losing streak based on probabilities and how the market's playing out at the time that that happens. Yes, it's frustrating and I have emotions that come up, but that's why you want to realize them, don't let them control your actions, and reset for the next trading day. And you want to just focus on repeating what is essentially your trading strategy, because that's your edge in the market over and over. And a big thing that I realized over time, and something that is very important to realize, is think of position sizing as a dial of intensity on your emotions. The smaller the size, the less you're going to kind of care about the trade and what happens. And the bigger the size, the more you're going to care about it. And so this plays out in a lot of different ways and will change over time as you grow as a trader. Initially, maybe demo trading is scary because you're trying to execute your strategy. But over time, you get used to that And so the dial kind of gets lessened to where you start carrying a less and less because the intensity isn't as much. You've adjusted to essentially the intensity size that you're at. And so this is where you want to switch to real money. Even if it's risking $30 per trade, that can, when you first start out, is intense and increases the intensity, but you care about the individual trade and are focused in a productive way. And then over time, that's how you scale up, is you can only increase your size when you get used to the current size you're at and you're emotionally ready to size up. I wouldn't necessarily size up when you go on a big win streak because, again, think about the probabilities, is you want to be able to handle a loss streak at your size you're trading. That's the true test of if you can handle the trading size you're at. And if you can, then increase your size a little bit to, again, increase and go up that intensity ladder of trading. That's how you scale up over time. But that's the whole reason why you can't jump up in size too quickly, is because you can't deal with it emotionally right away. You want to wait until you get desensitized essentially to the money on the screen. And so anytime you're feeling more emotional, it's okay to size down even for a day. You know, if the market's just intense, volatile, or you're on a loss streak, it's okay to size down for a couple days until you regain that confidence, and then you can go back to your normal size. Trading size is a tool, and so it's important to start using it effectively. And so a huge mistake I see a lot of people making, and for good reason, is we all get into trading really to make money. You know, trading is very appealing for the ability to make money in a short period of time. A lot of people get into it with the idea of having a daily P&L target. And this is extremely detrimental to your trading because any strategy does not work every single day. The market goes through different cycles and patterns. And so a strategy like mine that is purely reversal focused has times in the market where it can be amazing for weeks. And then the market, let's say, just starts to go into a massive trend and trends for weeks to where reversals don't really happen. And so for me, if I had a daily target P&L, well, that would cause me to force trades on, let's say, conditions that aren't favorable for my strategy. And what that would do is make it more likely for me to lose. And instead, what you want to be doing is only executing your strategy when the market is favorable for it. And you don't know when that's going to happen. It could be every day for a while. It could be to where you'd have to take a week or two between taking a trade. Again, because the market has any number, infinite possibilities of what it can do, you want to go show up to trading every day. If you're something like me, I'm a day trader. I show up every single day engaged and ready to take a trade, but that does not mean I'm going to take a trade that day or the next day. I am there waiting to see if my setup shows up. If it does, I execute, and if it doesn't, I just move on with my day. That's why for me, I only trade like 60 minutes in the morning because it allows me to just show up, see if my strategy sets up, and go about my day. If I had to sit in front of the market for hours, which I've tried to trade for 2, 3, 4 hours because logically you think, okay, well, if I trade longer, I'll get more trades because there's more potential for trades to show up, which is true. But in reality, that executing and doing that doesn't play out because sitting there for hours on end watching screens is boring at the end of the day. And it allows you to become more impatient over time. The longer I'm sitting here staring at charts, the more impatient I become and the more likely I am to force a bad trade. And I think that applies to pretty much everyone, which is why I suggest trying to trade a short amount of time or trade in increments. Trade for an hour, go take a break for 20 minutes, and then come back and trade for an hour. You want to always be focused on executing your plan properly. That is a winning day, not the outcome or how many trades you took or the profit you made of the day. And so what helps you find the real issues with your trading and start to break out of that self-sabotage loop is journaling your trades in some capacity. I think it's important to track why you're entering into each trade, because that'll help you realize, okay, am I entering in because of my strategy tells me, or am I entering in because FOMO got me in there? And so what you want to do is write down why you got into a trade, based on the pattern. Even if you FOMO in, there's always going to be a pattern you're trying to follow. And so write down the pattern, but then also the emotions you felt. Even if it's, oh, I was focused and locked in, or I was nervous. So many times for me, even now, I jump into a trade and I'm nervous to jump in. But even though I'm nervous, now I've broken out of that self-sabotage loop, I still execute and don't let that nervousness stop me from taking a trade. That's the difference between old me and new me. Is old me would feel that scared and nervousness and that doubt about the outcome of the trade and skip it. But now I realize it's okay to feel that emotion. It's okay to be nervous on the outcome because it's an unknown outcome and I'm risking a lot of money on this, but I jump in despite that because I know logically that the reasons to jump in are there. My strategy says to get in, and having an emotion and feeling an emotion is okay. I just don't want it to control my actions. And so tracking all that is extremely important because you'll start to see your own patterns over time and how your emotions negatively affect your trading. And so you want to create rules to protect yourself because everyone's different in how they react to certain things and how your emotions cause you what to do. And so for me, what I did when I had the issues of getting frustrated and going on revenge trading, I had a rule of I will only take a maximum of 2 trades a day. I will take, and if that means I take 2 wins or I take 2 losses, I would always stop at a maximum of 2 trades a day, because if you take 2 losses on a day, you're most likely not seeing the market properly. You're either trading emotionally or not reading things correctly, or just the market's not fitting your strategy that day. And really you should just call it anyway because it's not a good trading day for you. And on the flip side, having rules to why to get in. I try to focus on only taking the best setups possible, like what you could call an A+ setup. Because for me, I find that being patient and waiting for the best setups is what allows me to be confident in executing them and be more profitable over time. When it comes to trading, it's very easy to know and spot what an A+ setup is because usually it just jumps right out at you. And it's easy to spot what a horrible setup is. You know when it's obviously to not get in. The hard part is dealing with those trades in that gray area where you start to say things like, oh, I can kind of see it working out. If you are starting to say that in your mind, which is something I did, cue into that and realize that's kind of your brain trying to mentally gymnastics you into a bad trade. And because you kind of feel that way, that's a signal that you should key into that says, okay, I don't actually have a solid read here. I should avoid taking the trade, because so many times for me, that would be me jumping into a weak signal and it would turn into a losing trade. And another thing that really helped me is kind of going back to the amount you trade a day. I found that after about an hour, I would start to kind of, my eyes would gloss over and I would get bored or want to force a trade because I've been laser focused for the last hour. And it's hard to be really, really focused for long periods of time, because when it comes to trading and watching the markets, even if you're not doing anything, you are making so many decisions, even if that decision is to stay out of the market and do nothing. Because there's just infinite patterns and infinite outcomes of what's going on, there's so much going on in your brain that it is really mentally draining. And it's hard to disconnect the idea from, the longer I work, the more money I make. And that's usually correct for most jobs. But with trading, that is not the case. I find that the less I do with trading, the more money I make. If I trade for an hour every day, I trade a lot better, because when it comes to trading, it's a decision-making game. And so you have to be making the best decisions you can anytime you're trading. And me personally, I can't do that for 6 hours when it comes to trading. And so that's how I've created these rules over time to protect myself from what I know works for me and what doesn't. And again, this is just stuff that it takes time to learn. That's why you can't become successful with trading in a couple weeks or a couple months. That's really why it takes years to really master trading and to be able to scale, because it's so much self-reflection and understanding how you work and deal with every situation that comes up with trading. And it takes so much time for all those situations to come up, for them to repeat themselves, and for you to learn how they work and you work with them. Now, every trader goes through rough patches, especially when you're learning and going through something like a boom and bust cycle. You will go through drawdowns, and learning to deal with those and protect yourself from those will help you improve your profitability curve. I used to go through a boom and bust cycle all the time, where I would go on a win streak and then give it all back. And this was a lot of because of that self-sabotage loop, but I would get confident and then I would either size up or the market would shift and I wouldn't adjust to the market. And so going through those rough patches, you need to have a plan of what you're gonna do. It's important to have things like trying to reduce your trading size until you build that confidence back up and your trades start to win again, because there's no point in just blowing through all your profits when things don't seem to be working out. You can cut your size in half and still make good money if you're making wins, but also you're not losing as much money. You don't, as you see that profit graph go down, it starts to affect you more and more emotionally. And because of that, when that happens, you have to start to realize that, okay, I am not in a good emotional state. I can't just be done with trading for the day and reset by the next day. I need more than one day to reset. And so that's where sometimes I would take multiple days off. I would just take the rest of the week off. Whatever you need to reset. Again, it's not about trying to trade every day. It's about showing up to trading when you can make the best decisions possible. And if that means you need to take a week off, that's fine. Trading will always be there. More opportunities will always come. You want to get out of the mindset of you don't want to miss any opportunity that shows up. That will really help you be patient. And honestly, I would say the number one thing that made me successful, and I see make other traders successful, is learning to be patient. Another thing is, if you start to expand and get overly confident and say, okay, I want to trade more markets now, or new strategies, is cut those out. The best way to improve your trading is cut things away. Don't add things, take things away, and go back to your bread and butter of what you were successful with. Again, it goes back to the whole idea of simple is better. That's what has made me profitable, and what I've seen be more successful for other people. They tell me all the time that the way I approach trading and how it's so simple and direct and specific has changed the way that they view trading and how their success has been with trading. And so think about where you are with all these, with where you are with these loops, and start to think about how you can break out of them and improve your trading. If you want even more lessons that I've learned over the years, I have a free 75 trading lessons PDF that you can get via this QR code, or I'll leave a link in the description below. And if you want to learn the strategy that I've been talking about, that I use myself every single day and that I've seen really help other traders simplify and focus on what's important, check out this video right here. I'll go into every detail on how you can get started doing it and how you can get started trading with just $4.